Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish scenario where we are looking for a move towards the downside in a wave 1, 2 and then eventually a wave 3 to the downside for much lower prices, or a wave A, B and then eventually a wave C. In this particular scenario, a common target for a three-wave structure to the upside over here is the 0.618 to the 1.236, taken from the low to the high to the low over here. And as you can see, right in the middle, we have this resistance area sitting between 37.1k and 37.4k. And definitely something that is eyeing my interest is this order block that we have over here, which is sitting between 27.3k and 27.4k. Now also in this particular scenario, this wave 2 or potential wave B is very, very long in time compared to a very short and impulsive wave 1 or A. If we take a trend-based fib time over here from the high to the low and we double click and I open the extension, then you can see that everything that happened after this move to the downside is already longer in time than 6 times the length of this move to the downside, which is incredibly rare for a wave 2 or a wave B. Most commonly, a wave 2 is somewhere in between the 0.618 and the 1.618 fib time taken from the high to the low of a wave 1, and for a wave B, like, typically shorter than like the 3 fib time of a wave A. So the fact that this move over here is so long in time and we're still moving to the upside is increasing probabilities for continuation and decreasing the probabilities for a rejection and a move towards the downside. Now if we zoom out and we actually look at the 4-hour over here, then one of the scenarios where you do want to see downside is this ABC expanding flat. Over here, we are then looking for a wave A to the downside, a B, and then a wave C, which means that this high over here is the end of a 5-wave structure to the upside, and now we are in a bigger flat structure over here, which is common for a wave 4, and then a 1, 2, 3, 4, and eventually continuation to the upside in a wave 5. Now over here, then you can see wave B, most common target, the 1.236 to the 1.38, which has been passed, currently grinding against the 1.618 over here. Big wick, however, above the 1.618, but the 4-hour candle so far closed below the 1.618, which is important, with the 1.618 sitting at 37.1k. And then you want to see an impulsive move towards the downside. But as just spoken about on the 15-minute time frame, the fact that this move over here to the upside is so long in time does lower the probabilities that this is a wave 2. However, we are against resistance, so we can just observe what happens at the blue box. In this scenario though, you want to see this as a wave 2 and then a bigger wave 3 to the downside, where the most common target for this wave C is between the two 1.618s, sitting between 33.5k and 31.7k. Inside this area, we have this key level, as you can see, 32.5k, and that is a level that I got from the 1-hour chart because it is the high of this 1-hour gap over here. You can see we got a pump to the upside. The first red candle creates a low over here, which is then the high of this gap, which is always an important area and an area that we also have to keep our eye on. If we then go to the lower time frames again and actually look at the bullish scenario more locally, we are looking for continuation to the upside, which of course is then very simple on the chart, a 1, 2, now in a 3, eventually a 4 and a 5, where an area of interest is the target box up here, which is the golden target box sitting between 38.5k and 39k. But that does mean price has to go through this blue resistance box over here. Now this resistance box, as mentioned, 37.1, 37.4, has a couple of confluences, and only if price can flip this area, move to the upside, maybe continue building bullish CVD divergences against resistance, probabilities would increase more for a move towards the upside. If we zoom out just a little bit more and we go to the 1-hour, then in the 1-hour bullish scenario, we're looking for an impulse 1, 2, 3, 4, 5. The problem I have with this impulse though is that this wave 4 wicked into the 0.618, which is incredibly rare. I've not really seen this before, where the 0.618 is support for a wave 4. Most commonly, the 0.5 to the 0.236 is the area of interest for an 05. 0.618 very rare. I usually use it as invalidation. The official invalidation is overlap between 1 and wave 4, which is not the case, but still, this is incredibly deep for a wave 4, which lowers the probabilities for an impulsive structure to the upside. And also, if we look at this move to the upside over here being a potential wave 3, then we do want to count it as a sub-degree impulse, right? 1, 2, 3, 4, 5. And when we look at this move to the upside, at the moment, this could be like a first structure, second structure, but this looks like more like an ABC type of move instead of a wave 3, where you have a wave 1, 2, 3, 4, and a wave 5. This over here being a wave 4 of this wave 2 is too deep, because then your wave 1 and your wave 4 are having overlap, and that is not what you want to see, which lowers the probabilities of this particular scenario. If we then zoom out once more, look at the impulsive structure to the upside since the 25k lows, then we're looking for an impulse here, 1, 2, 3, 4, 5, and you can see on the 12-hour very nicely how well respected the 618 Fibs are for a wave 3, which is exactly what you want to see as well for a wave 3. The 1.618 got respected, little bit of resistance, then the 2.618, big wick, ranging to the upside, 3.618. Now that we passed the 3.618, and one can argue maybe even retested it, that increases the probabilities as well for the 4.618 eventually, and the 4.618 is sitting inside that golden target box between 38.5 and 39k, which is very, very interesting indeed. However, unrelated to where the high of a wave 3 is going to be, we are eventually expecting a deeper retracement to the downside in a wave 4, where the targets for a wave 4 are between the 05 and the 236, currently sitting between 33.6k and 31k, with the invalidation of a wave 4, there he is again, the 0.618 at 29.8k. If we then look at the CVD divergences locally, then locally over here, price has been building bullish CVD divergences. First of all, with this drop to the downside, bullish CVD over here, higher low in price, lower low on the CVD, but also more locally over here on the 50-minute time frame, we had bullish CVD divergences over here, higher low in price, but again a lower low on the CVD divergence, which increased the probabilities for at least a bit of a move towards the upside, which is what we saw right now over here, hitting the resistance area as well that we were looking for and taking this high. Because the target for this bullish CVD divergence was taking this high, has been done very, very nicely indeed. And now the CVD divergences more local are neutralized, but you still have this one. However, the CVD divergences on the right side of the most recent high or low, meaning this over here, has priority. So I am definitely going to keep an eye on the CVD divergences that we are going to see as price is finding resistance over here. Is price going to range below resistance and build more bullish CVD divergences, or is price going to reject, retrace, right, ranging below resistance, but build bearish CVD divergences? That is going to be very, very interesting indeed, and will definitely impact the probabilities for the up or the downside. And if we then finally look at the probabilities of the different scenarios, then on the medium time frame, the highest probability scenario is the bullish scenario, as we still expect, of course, a move towards the downside in then a wave 4, but then continuation to the upside for higher prices in a wave 5. Of course, the question is, when will wave 3 be in? But that is something we can only really determine once a wave 4 is really in the making and price actually starts to move to the downside. So we got to be patient. On the low time frame, I write slightly bullish question mark, and I almost like just wanted to write neutral over here as well, because wave 4 hit the 0.618, which for me usually invalidates a wave 4, but it is a wick into the 0.618 and candles closing on the 05, so that is again the saving grace for that scenario. It's difficult to continue counting an impulsive structure from the 34.1k low over here towards the upside. It's not clean in a 1, 2, 3, 4, 5 wave structure, which of course impacts the probabilities. I wrote like neutral / bear behind it. Then we have bullish CVD divergences that continue to build as price is moving to the upside, and of course we're in bullish market structure, so those bullish CVD divergences should be something we have to look at. No bearish CVD divergences to be seen so far. We are now at resistance, of course, so if price is going to reject, maybe move back towards the upside in a retracement, show bearish CVD divergences, it would increase the probabilities for price to move to the downside. So that is something that I'm going to be looking for locally, observing the reaction at the target box over here. As we don't catch knives, YOLO or FOMO, we observe the reaction and then make a choice what to do, long or short. Also, the high so far did not hit a target box. This high over here is like for me in the middle of nowhere, didn't hit the target box that we have just below, and also I had a target box over here, but it pushed through. So it's not an interesting high so far. It's been in the middle of nowhere, and I do like target boxes to be hit. And on the micro time frame, it is bullish till bearish signs are coming. Of course, also the market structure currently at resistance, of course, so we can definitely look for CVD divergences, volume, and whatever there. It's either an ABC, WXY, or an impulse. Not yet too clear, because for an ABC, of course, it's a 5-3-5 move, and for a 1-2-3, that is exactly the same, but you like to see continuation. Wave 2, however, is very long in time compared to wave 1, and then a wave 1-2 potential continuation to the downside, which lowers the probabilities a bit for bearish scenarios. Keep an eye on the resistance. CVD and volume is what I'm keeping my eyes on, especially the CVD divergences, which at the moment, if I have a look at the CVD over here, you can see price moving up, yellow moving down. But, well, the bullish divergence that we had more locally here already played out with price taking this high. Got a bit of a rejection. Got to wait and see now what happens over here, but potentially more bullish CVD divergences to come for then more upside. We observe the reaction. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.